In this week's episode of Investors Corner, me and Mike are joined by Tom and Fez, who are mortgage brokers with over 20 years combined experience. Now, the reason why we wanted to get Tom and Fez on is because there's a lot happening with mortgages at the moment. There's jumps in swap rates, there's rises in interest rates. So we're going to dive in to what exactly is going on in the mortgage world and what their predictions are going forward. We'll also have a discussion about is enough being done to educate younger people on the financial aspects of life. So is enough being done regarding mortgages, savings? How can they get the deposit to buy their first home without relying on mum and dad? And Mike will also give us an inside look into what his experience has been recently in regards to the Dubai property market. So make sure that you're listening to this one. Make sure that you subscribe to the Investors Corner.
Welcome to another episode of the Investors Corner podcast. Today, joining us for a second or third time, I think, we've got Fez and Tom, experienced mortgage brokers, to talk us through what's going on in early 2024. Is it just clickbait headlines, or are mortgage rates going up? Are swap rates going through the ceiling? Are deals being pulled? Is it the beginning of the end, lads? Where are we?
Mike's full of confidence there from Mike.
They have gone up a little bit, but it's a very small amount, to be honest with you. It's not been enough to slow any kind of business down that I've seen, and it's a lot better than what it was last year. I think people come out of the blocks pretty quickly in January and February, to be honest with you, in terms of mortgage inquiries that I've seen coming through. A lot of people just coming out saying that it's the beginning of the year, we're thinking of making a move at some point this year. Can you tell us how much we can borrow and what the monthly payment's going to be? And that's been very, very busy, even though the rates have gone up a little bit. So spot rates have gone up a bit, but it's given the banks enough room to reduce rates like they did at the beginning of the year, which has been good. So no, I don't think there's any sort of bubble that's bursting already.
Well, Twitter will be disappointed.
So you're going to say, yes, the end, that's it, we're done. Get the views up, get the clicks going. But yeah, obviously not.
It's often less exciting than the headlines make it out to be. And I think because there's been so many sort of micro changes, it's easy for media institutions to get carried away with it and try and bring people in. But in reality, when you dig into it, or if you have a bit of a finger on the pulse, it's not quite as dramatic. When you get down to the pounds and pence of what the difference really is, then it's not so bad. And I think we have observed that from coming out of January and going into February, there's almost this kind of instant just tick into a slightly higher rate. But I think that's indicative of a January market in terms of lenders. Lenders will have a mini price war and
a bit of a January sale,
and then they'll kind of rein back. And Tom and I were having this conversation, and then one of the points he made was often when they sort of hit a particular target, they'll rein it in a little bit by increasing rates and just sort of letting somebody else have a crack at the whip.
They need to keep their service levels at a stage where they can underwrite them all quickly enough, and it's a tail end of time. They do it all the time. If they're too busy, they will just stick the rates up and slow the flow coming in. But also they know that there's some niches where you just have to take a client to a certain lender. It's going to be, we'll take it or leave it. The rate's gone up.
Yeah.
You've got to go through Halifax or HSBC anyway, because you just fit that kind of criteria. So it's almost a bit win-win for the lenders. They get to slow their workload down, and if someone has to go to them, then they pay a high price for it, basically. So yeah, that's quite normal. And also, we just had really, really big drops at the beginning of the year, like that 0.8 drop from Halifax, literally, I think the second week of January.
They did the 0.8 for the headlines, allocate a certain amount of money or numbers of loans that they're going to do, and then they'll step back into the shadows, let someone else take the heat of the market. What we've seen from an agency side is very much the same. The sentiment is there that people were delayed last year in making decisions that they wanted to make. Now things have settled. Yes, they've settled a little bit more expensive, but the key is people are confident that there's a bit of consistency. That mortgage rates are probably going to be about the same this month as next month and the month after, and probably into the summer, and then we'll see where we are, obviously, with the general election at the end of the year. But people would rather get the move done, get the mortgage rate booked before any other periods of instability, which a general election generally obviously causes in the housing market. The world will stop for 6 weeks while a general election goes on. So that's what I see as the people who wanted to do something last year but were slowed down by it because maybe they couldn't port their mortgage, they needed to borrow more, are now doing that. So January, February, from an agency point of view, whether that be investors or be residential buyers, has been really, really positive. People making good decisions.
I think what we saw before is people wanting to hold out to see what happens within the mortgage space. But what we've seen now is that you just need to get on and do it, don't you? And jump into it. There's never going to be a time when everything is going to be perfect. And I think more people have started to realise that now. More people are just getting on with their plans rather than just putting their plans on hold. Because you're never going to get to a point where mortgage rates are going to be, under 3% again, if that, or 3.5%, something like that. It's not for a long time. So just get on with your plans and just get it done and get on with it.
You need to move. If they're holding off all year, then there's still, might just need more space because you're having kids and that sort of thing. But also, I think the rates will stay. I can't see them going up much higher because the banks need to lend because their net lending last year was way lower than they would ideally like it to be. So they need to make up that deficit.
The number of sales under offer year on year is up 16%. So that's the first 7 weeks of the year? Where are we? Something like that. 7 or 8 weeks of the year. We're 16% up year on year, which probably will equate to about 150,000 houses if it carries on over the year, which will bring us back, lo and behold, just above 2019. Funny that. So we've gone through the period where we sold way more than we thought, and then a period where we sold way less than we thought. So those two average themselves out, and we're back to a normal market again. Where does that leave buy-to-let investors in the buying or selling process? That's the interesting question, because obviously much maligned buy-to-let investors from a government perspective. I'm not going to invite Andy to talk about the renters reform bill.
Please don't. I've had enough of it.
I think just to go back to that point, the general rhetoric this year is a lot more positive than it was 12 months ago. So there's definitely that, rightly or wrongly, that feel-good factor coming into the market. And I think last year was a really good education piece for anyone with a mortgage or anybody aspiring to get a mortgage, because all of a sudden it wasn't as straightforward as it's been in the last 15 years. Okay, maybe not 15, a little bit shorter than, let's say 10, or the 10 years prior to that. And people were a lot more clued up in general. And I think whether that's, mortgage advisors on podcasts banging the drum, or influencers on social media, or just media publications just posting relatively useful information that wouldn't normally really make it out into the cycle. So that conversation has, I think, helped people to understand mortgages more and make better decisions. So there's definitely that carrying into this year. And I remember dealing with a particular buy-to-let client last year where we had no idea what was going to happen to rates. So we reserved something very early on and then monitored the market for him over the next 6 months. And actually, come the end of that 6 months, there was some much better rates out there. So I think people kind of learned to get ahead of the game last year. And I think that's something that that's a habit that they'll carry on into their mortgage journeys in future and this year as well. That's a really healthy habit to have. Because at the end of the day, if somebody doesn't approach us, we don't know their situation, we can't help them out. But I think it's really helped instill in people that, the earlier you get ahead of the game, the earlier you start making inquiries and figuring out what's available now to what might be available a little bit later on, then the better situation that you'll put yourself in. And I think that's I think that's a really good thing to take.
I think it's financial education, isn't it? Which I think there's a huge amount of the population aren't blessed with a financial education, which is that kind of common sense of, okay, the news has been talking about interest rates going up for 2 years now. And I still see on my Facebook people shocked in local community groups that their mortgage is going up and they need to remortgage by next week and who can help them, which does genuinely blow my mind because there's so much content out there. And I was just before we came in saying my mortgage is up in October, so I need to get my rate booked in April so I can then sit on that confidently, plan ahead. I've got 8 months to plan ahead for it going up. And if it comes down between April and October, well, my broker can just do a bit more work for me and reapply for a better rate and keep doing that, as you say, keep assessing that every week or 2 weeks. Am I in the best position until the clock ticks down to zero? And that's I genuinely think everybody should be doing that, and everybody's broker should be shouting it from the rooftops of this is where you are. But I think a lot of people, maybe they don't have brokers, maybe they don't have a good relationship with their broker.
Yeah, that's what I was just going to say. I mean, a lot of people that I've spoken to recently in regards to mortgages, whether it be friends, family, or investors.
Well, you had a landlord the other day say, I need an extra £1,000 a month rent because my mortgage is going up shortly. It's like that. You shouldn't be, you've been making about 1,500 quid a month for the last 3 years on a fixed rate.
Yeah.
Where's the money gone?
Yeah. And it comes down to that educational piece, doesn't it? And having the right people by your side to guide you through that journey. Because the people that I've spoken to don't speak to brokers. They only go directly to the lenders, as in, if you've got a broker and you've got that personal relationship with that broker and they've got access to a wide variety of products, those are the people that you need to be speaking to because they will look after you. You know, going direct to a lender, they've got their products, not necessarily going to hold your hand and look after you and guide you in the right way, are they? It's just, these are the products, opt into one. As in, a broker will hold your hand through it and guide you through the process. So that is the importance of what you do and why you're here to help people.
I think to add on to that, you make a really good example of what happens when you go directly to a lender is they can't give you that advice on the whole of the market. And I think for me, that's what's really important is going to a broker that's got access to every lender and can help you make a more informed decision. Otherwise, there's an argument to say, well, why don't I just go to my bank? And that's one that people will always make is why don't I go directly? And I think often people forget that there's intricacies within a mortgage application that are easily overlooked by somebody who hasn't, learned how to do that process. Or
there's something that's probably not shouted about enough from mortgage brokers, that if they're part of a mortgage brokerage, quite often they'll get a better rate from the Halifax or Nationwide than you will get from Halifax or Nationwide by going directly, which seems totally counterproductive from the bank's point of view. They'll pay you for the benefit of giving your client a cheaper rate than they could have got by walking in through the door.
Yeah, and I think to counter that, there's times where there might be a better rate if the client goes directly to the same lender, in which case the broker will disclose that. So
now it used to be with some banks it was about 50-50 in terms of applications going through their direct channels and going through a broker. I know for a fact that Nationwide now is about 75-80% go through a broker now, and I think that is going the same way with a lot of other lenders. Good broker should have some good communication and also just like empathy to be able to put themselves in that person's shoes. I would like to be ahead of the game, so I'm going to put you ahead of the game. Let's lock this deal in 6 months before, so it's not going to get any worse than that.
This is your worst case scenario. Like, so there's no point not doing that. Like,
that's the position I'd want to be in. So I want my client in that position as well. So when you hear, it's quite scary to hear people leave it till 2 weeks before. But because at school we learn like algebra, science, that sort of thing. I'd like to know what is a mortgage, what is tax, or that sort of thing.
Yeah, so just talking about the financial side of things. So I read a news article yesterday, yesterday, about more people aged between 25 and 40 are becoming more reliant on mum and dad to buy their first property because they need the deposit money. Now, do you think more could be done for a financial point of view in teaching youngsters and people in school as well? You know, you've done it a few times, haven't you, Mike? Where you've gone into the schools, talked to them about mortgages, investing, where to put your money. I do it with my 7-year-old daughter. I constantly talk to her about how she should save her pocket money, where she should put it, and all of that to try and
What's
teach
she invested in at the moment?
Well, I'll get her into the crypto. I'll get her into the crypto at some point. But yeah, she's holding on to her money now because she's slowly starting to understand, the things that I do and the mistakes that I made. And this is a 7-year-old girl, right? That's already starting to save money, and that's what I want to instill in her, and making sure that when she gets to her 20s, she's got a pot of money already there. She's not spending her money, on things that she doesn't need. Or she's still got to have a good time with that, obviously. But yeah, it's about teaching them what needs to be done. I mean, in schools, if people like Mike didn't go into schools,
we found a massive difference depending on the school that we go to, of the interest level. When Ian or I have spoken about running a business, about the property market, or about what a mortgage is and how to get one and how you're affected, is we've been to some okay state schools and talked for about 60 minutes and had no questions back. And I did a girls' public school last year, and I was basically held to ransom for about 3.5 hours by 8 16-year-old girls who just fired questions at me for 3 hours. The interest level was absolutely unbelievable. And I don't, whether it's because it was just that day, or whether it's because it was a slightly different demographic where their parents
have double maths afterwards.
Yeah.
Well, their teacher literally cancelled the next lesson. They just carried on. It was eye opening that they were much more open about asking questions about money and much more interested in questions about money, maybe because they come from families where money's been made, or parents were entrepreneurial or business owners, rather than
and that's where it comes down to, set the example for your kids, teach them about money, and then hopefully when they get to the age of buying their first house, they can do it all by themselves, because I'll take more pride in doing it myself rather than relying on someone else to get it for me.
So the biggest one that I see that people overlook, and it's easy to overlook, is spending and things like store cards, but not necessarily just that. I think that the way I always think about it is, if I'm coming up to a mortgage application and I'm spending money, I always have this kind of image in my head of a person with a little clipboard every time I go and spend something, because people are still kind of surprised how far back lenders will ask to see your bank statements, and that is to see where that money is going. Is there any committed expenditure that's going to places that you perhaps didn't mention? Or, I mean, really that should be done by us, obviously, when that comes in, that information comes in, and often it can trip up applications in terms of the information that somebody gives you straight off the bat, and then you have a look through their bank statements, and all of a sudden you think that bit there is going to have an impact. It might not be, when you look at the criteria, you think it will still work. It's just going to decrease the amount that you can borrow. And I think that's something that people start to think about too late. So, if somebody is getting in contact and I know that that application doesn't need to go in for another 6 months, one of the things I'll say is, all right, think about what you're spending your money on, and think about,
I can see you with a red pen on their bank statement. Like, that's got to go. That's got to go.
It's perfectly acceptable things. But there's things that will raise questions and slow applications down. But I always find that, especially with things like gambling and things that will be picked up by lenders, I do think that is sometimes, a really easily avoidable issue when it comes to the mortgage. And I think people should really start to think about that 6 months in advance, often longer, not often, but in certain situations, a lender might ask for more. They might ask for more years of pay slips, proof of bonuses and things like that. So it's just about being honest up front and making sure you're putting yourself in a situation where, it's almost like one of these conduct things, isn't it? If you're in a position somewhere, will you say the same thing if your boss is over your shoulder? And it's the same sort of situation. Will you still spend that money if you know that there's going to be an underwriter looking at that bank statement 300 quid this month on gambling websites or so and so, at what point are they going to say, we're going to treat some of that as committed expenditure because you do it so often? So it's just about being careful. And I think understanding that, one of the points that we talked about a little bit earlier was going directly to a lender and using a broker. And that sort of ties in to which broker would you go to? If for a particular situation, which broker is going to look on, Tom's application more favorably than others? Because you could think, actually, these guys are offering a great rate. You go to them, but you don't really match the criteria. And not every applicant is going to look through the lending criteria of each lender and match that to themselves, and often put themselves in a situation where they have an application declined, which is obviously
there's the typical aspects of being self-employed. Some lenders will be favourable and some just won't take it. Whether you're a contractor, whether you're commission paid, whether they take all of your commission, half of your commission, or whether it's the average of the last 2 years. So sometimes you have to prepare for 2 years to apply for a mortgage. With other banks, you just don't. Got a quick anecdote about buyer sentiment from my holiday last week. I managed to go on holiday, everyone.
Well done.
In case Jamie's listening, he talks about his holidays every week.
Well done. He's in for the rest of the year now. He's not going away.
Obviously, being an estate agent, whilst I was on holiday, I did a little research on the local property market where I was, which happened to be in the UAE. And I used to live in the UAE. So I put a little call into Emar, who are the master developer, and just said, I'm interested in the property. From the UK, business owner, got a deposit ready to go. And he said, well, we're launching a building tomorrow. You can buy a 1, 2 or a 3 bed. Which one would you like to reserve? And I said, well, I don't know anything about it. And he said, what do you want to know? Prices would be good. So, oh, do you want to know the prices? I was like, yeah. And how do I pay for it? Well, it's over a 3 or a 4 year payment term. I said, can you get a mortgage? He said, why would you need a mortgage? I said, well, so I just pay in chunks until the building's delivered. Yes. Does anyone get finance? No. And I said, well, okay, tomorrow's probably a little bit soon for me. He said, because they're going to sell out tomorrow. And he said, well, we've got another release in the future. I said, what's that, next year? He said, no, this is the UAE. That'll be next month. And we'll sell that out as well. I said, are many British people buying? Loads.
And this is what Mike does in his spare time on holiday.
100%. It's what every estate agent does in their spare time on their holiday. Don't pretend that you don't look in estate agents' windows when you're on holiday. And it just reflected to me that whilst the media will talk everything down and give the cost of living crisis, which I totally understand, if you're on a fixed income, things have got more expensive and you're being squeezed. But the amount of cash that seems to be, I'm going to use an awful word, sloshing around the economy. It just blows my mind in some cases. That was his opinion. He was like, you've got 15 minutes on this call. What do you want to reserve?
Forget, I mean, I'm not originally from the UK, and I find that to be similar case in the UK. You have a 10-15 minute viewing of a house, and you're often up against other people, and you have to make a decision then, are we going to offer on this one, and is this potentially where we're going to spend £500,000 or more or less, whatever. So it's the same kind of thing. It's just shortened down, I suppose. But and I think the real driver of that is buyer demand. If there wasn't any buyers, you could probably have a viewing, you could have a second viewing. And I remember what it was like, working in an estate agency off the back of the last recession, where you would have a second viewing and a third viewing, and maybe then a viewing with your builder.
But there's nowhere near that supply.
But now it's now the difference being is that the buyer demand is still there and the supply isn't. So you're still often put in a situation where you have to make a quick decision. And it's
the best bit of my anecdote I missed was where he said, "You're from the UK?" Yes. What's your budget? 7-8 million dirhams? Just assumptively that I had 1.2 to 1.3 million pounds to spend in cash on a property that hadn't been built yet, which says it all to me.
Do you?
No, not yet. Next time. So until next week, thanks for joining us on the Investors Corner. I'm going to try and get an estate agent from Dubai on to talk us through that next week.
That's a good one.
And we'll see how we get on. Why have we made the Investors Corner podcast, Ian?
I think online at the moment there is just way too much noise, waffle and nonsense. Everyone's got an agenda. So the goal was to make a podcast for people that want to invest money in property or other areas where there's no waffle, there's no nonsense, there's no agenda. It's opinion led, but it's an honest opinion. And it might not be the right answer, but we're going to share it.
So on the podcast, we're going to supply people with access to mortgage brokers, financial advisors, planning experts, development consultants, everything around the property industry and the wider fields.
Yeah, so if you're looking at investing in the future, you know that just having an income from your employer or from your business is not enough to give you the life that you want down the line. We're going to hopefully give you some of those answers that will give you the solutions you need for the future.
So please hit the subscribe button. The more subscribers we get, better guests that we can get on, and the more people that we can reach. So hit subscribe.